Hello and welcome to Nepali Business Talk. Based on your requests and comments on our previous video, in today's episode of Nepali Business Talk, we'll discuss in detail about the new Nepal accounting standards for not-for-profit organizations. We'll try to give you a holistic understanding of the NAS while covering the most important technical aspects. So without further ado, let's start the discussion on our today's topic. The decision on implementation of NAS for NPOs was passed by 236th Council meeting of Institute of Chartered Accountants of Nepal. As per the decision, now NPOs should mandatorily apply NAS for NPOs for all the financial statements to be prepared after first draft in 2077, that is fiscal year 2077-78. However, voluntary adoption of NAS for NPOs is encouraged from this fiscal year itself. So what is NAS for NPOs? NAS for NPOs are a set of financial reporting standards prepared by Accounting Standards Board of Nepal. Financial reporting standards are set of principles which guide and govern how financial reporting are done by different organizations. Previously, there was no financial reporting standard for NPOs, which created a lot of confusion for users and preparers alike. But this situation has now changed and this standard has filled that vacuum. Here, I quote the objective of NAS for NPOs stated in preface of NAS for NPOs, which says, the objective in setting up NAS for NPOs is to assist those who are responsible for the preparation of financial statements to improve the quality of financial reporting, thereby providing adequate information to the users of financial statements. The intention is also to reduce the diversity that exists among NPOs in accounting practice and presentation. Now, this explains the main purpose of NAS for NPOs. That being said, let's get into our main topic. We'll basically try and understand the framework and concept behind NAS for NPOs and the financial statements and its elements. For the ease of understanding, the contents of this video are divided into two parts, which is concepts and components. We'll start with the concepts. To understand to whom the NAS for NPOs is applicable, let's dive into applicability and definition. Paragraph 3 of NAS for NPOs clarifies that this standard applies to all non-profit organizations established with the purpose of benefiting the society as a whole, irrespective of their legal status. The Accounting Standards Board has further issued a clarification regarding the definition of not-for-profit organization, which you can see on your screen. A simple summary of this definition is that NPO means all kind of charitable organization, including those registered with appropriate act and may or may not be affiliated to SWC, INGOs and bilateral agencies. The second point is key concepts surrounding the preparation and presentation of financial statements and accounting by NPOs. There are four concepts that are prerequisites to accounting and financial reporting of NPOs. The first one is double entry accounting system. Simply to put, it requires each transaction to be recorded into two different accounts simultaneously, that is debit and credit, and each debit has an equal amount of credit. The second concept is accrual basis of accounting. We are all familiar with this concept. Under this accrual basis of accounting, transactions are required to be recorded when they occur, irrespective of when the cash is received or paid. Still, some of the NGOs in Nepal traditionally follow cash basis of accounting, which will not be allowed under NAS for NPOs. Another concept is the concept of reporting entity. It simply states that all transactions carried out by NPOs as an entity has to be reported as a single reporting entity. And finally, the concept of going concern. With many cases of frauds, bankruptcy, and liquidation happening overnight, going concern consideration have become deeply ingrained in the financial reporting. Currently, COVID-19 crisis is a burning example of going concern consideration. So the concept of going concern is equally relevant for NPOs and has been adopted by NAS for NPOs as well. The crux of this concept is that an entity will carry on for a foreseeable future and neither the management intends to close nor there are conditions existing that might force discontinuation of operation. So these are the four concepts that will surround the preparation and presentation of financial statements by NAS for NPOs. Now let's briefly discuss flow of accounting process for NPOs. Any accounting process starts with transaction. For example, let's say Bright NGO received a grant of 10 lakh rupees. Now this is a transaction and based on the source document, it is recorded in the accounting system using journal entries, which goes into ledgers, and ledgers ends up in trial balance. Based on the trial balance, financial statements are prepared. Now there are a set of framework principles and reporting standards that guides the preparation of these financial statements. In our case, that is NAS for NPOs. These principles and accounting standards also guides the adoption and application of accounting policies, which in turn guides how accounting is done. So all of these components in the accounting process that you see on your screen are interdependent. The last remaining concept is accounting equation. Accounting equations are simply the mathematical representation of different elements of financial statements. As you can see, in case of financial position, total asset will be equal to liabilities and net assets or accumulated reserve or funds. The reserves are called different names in case of different type of organizations. If this was a commercial entity, then it would be equity, which is the residual interest of shareholders. Since there are no shareholders in NPOs and boards and members are mere caretakers of NPOs, they are classified as net asset or accumulated reserves of funds. Please note that the term net asset and reserves have been used interchangeably in various sections of NAS for NPOs. But make sure to use a consistent term once you have made your choice about which one you want to use. The second equation represents income and expenditure. Expenditure deducted from income results into surplus or deficit as the case may be, and any change as directed by NAS for NPOs will be part of accumulated surplus or deficit categorized under unrestricted reserve. Third equation simply shows the changes in cash balance. Now we completed the concept part of NAS for NPOs. Understanding of these concepts will help us better understand the preparation of financial statements of NPOs. Now let's discuss about the set of financial statements prescribed by NAS for NPOs. NAS for NPOs in paragraph 6 states that a set of financial statements shall include 5 documents, which are statement of financial position, statement of income and expenditure, statement of changes in reserve, statement of cash flows, statement of accounting policies, and notes to financial statements. Besides this, the standard also opens possibility of preparing 2 auxiliary documents, which are fund accountability statement and statement of budget variance. So these are project level reporting documents and are based on the agreement with the donors. We'll discuss each one of them one by one. Let's start with the statement of financial position. This is the format of statement of financial position prescribed by NS for NPOs. However, please note that the format is prescribed as a minimum requirement and changes are possible for better presentation. The elements of financial positions are segregated into current and non-current items for both assets and liabilities. Organization can also choose to present it based on the liquidity, but it's better to present with current and non-current distinction as the model has prescribed. Next point to note is that all the major line items should be disclosed separately, like you can see on your screen. Out of these, I will specifically deal with 2 major pitfalls in case of NPOs in the statement of financial position. The first pitfall used to be the case of accounting and presentation of property, plant, and equipment, which the new standard has clarified. Now, PPE can be acquired in 2 ways, by donation or through purchase. If you receive an asset as a donation, then it has to be accounted as PPE at fair value and a deferred revenue account has to be created. If you purchase an asset, then there might be 2 conditions. If you purchase it from your co-funds, then it has to be accounted as PPE and depreciated. If you purchase from a project, then at the time of purchase it will be accounted as a project expense, and at the end of the project, if the asset will be given back to NPO itself, then it will be treated like a donated asset that we just discussed. The second pitfall was accounting and presentation of funds or reserves. NS for NPOs has segregated funds and reserves into 4 main types. Unrestricted funds are those that do not bear any kind of restriction in usage and generally compose of surplus deficit brought from statement of income and expenditure. Designated funds are part of unrestricted fund designated by the board for a specific purpose. Restricted funds are those funds which are received from donors with certain conditions attached to them, and the organization will only earn them if they fulfill the set of conditions. So, amount received for such funds are directly credited to restricted funds by debiting cash or bank. Finally, endowment funds are sort of permanently restricted funds, and only earnings from such funds may be used for different purposes, but that too within the conditions prescribed by the donors. Besides this, one line item that model financial statement prescribes is other capital reserve, which we presume will hold other funds not classified under above classifications. Now, other line items are general in nature, and thus we will not be dealing with them one by one. If you have any questions, queries regarding any of the elements, please drop a question in the comment below and we will answer them. The second statement is statement of income and expenditure. Statement of income and expenditure summarizes the total income and expenditure during the year. When I say income, you must understand that I mean earned income and not the amount received. I'll get into that in a while, but first let's go through the model statement of income and expenditure proposed in the NAS for NPOs. As you can see, statement of income and expenditure separates income in first block and expenditure in the second. The net balance of income and expenditure will either be surplus or deficit for the year, which will be carried to accumulated reserve or fund in the statement of financial positions. All the major items in the income and expenditure has to be separately disclosed. In this statement, I will deal with the incoming resources, which I'm sure is also the topic you want to hear more about. Now the note to the incoming resources further breaks down the incoming resources into 8 items. Please note that these line items may vary with organization and type of incoming. I'm more concerned about first two, which are grant restricted funding and grant unrestricted funding. Now there is no issue with unrestricted grant received, as they will be directly accounted as income at the time of the receipt. Let me clarify on restricted funding. When an NPO receives restricted fund like a grant for a project from a donor, that has to be accounted as a restricted fund and shown in statement of financial position. When the NPO incurs cost against the project, an equal amount has to be written off from the restricted fund and taken to income and expenditure under grant restricted funding. So what you have to understand here is you do not take the full amount received from donor to income and expenditure, but an amount equal to match the expenses incurred out of such funds. As a result, the net effect of project income and expenses will always be zero in case of restricted fund, as I have also highlighted in the slide on your screen. To make it comprehensible, let me show a related journal entries. So like you can see on your screen, at the time of receipt, the bank account is debited and it will be credited to restricted fund account. At the time of incurrence of expenditure, the expenditure will be debited and bank will be credited, and a simultaneous entry for income booking will be done, in which a restricted fund account will be debited and grant income for restricted funding will be credited. So this will always give you a net balance of zero when it comes to project income and project expenses. Next up is statement of changes in reserves or net asset or fund. Now, statement of changes in reserves has only been stated in 2 places in the entire NAS for NPOs. First in the set of documents to be prepared, and then in the model financial statements. So basically there are no any hows and whats about these specific statements, and it's more of the interpretation from the general uses. The statement of changes in reserves depicts the changes in net reserve of the NPO during the year. I also want to bring up the fact that the name of this statement will also change based on whether you call it a net assets or funds or reserve. Next is statement of cash flows. This is a generic format of statement of cash flows recommended by NAS for NPOs. Cash flows are presented as cash flows under operating activities, investing activities, and financing activities. NAS for NPOs allows for both use of direct and indirect method of preparation of cash flows. One point that I want to clarify here is that the paragraph 6 of NAS for NPOs states the name of this statement as cash flow statement, whereas the model financial statement uses the statement of cash flows. Since statement of cash flows is the standard term, we choose to use the same. NAS for NPOs in para 36 clarifies the purpose of statement of cash flows, which is to provide information on cash inflows and outflows over a period of time. It also makes it clear that it should be prepared for entire organization and not just a part of core activities or project activities. The final statement is a statement of accounting policies and notes to financial statements. With the move towards NFRS, the overall emphasis of financial reporting has been to disclose as much as possible. NS for NPOs continues the same and emphasizes disclosure very much. As evident from the name itself, the statement of accounting policies and notes to the financial statement contains detailed listing and explanation of accounting policies of NPO in one part, and on the other, it has explanatory notes to the financial statements. It also discloses critical matters that are critical to understanding of financial statements but are not presented elsewhere. On your screen, you can see the points that are suggested in the model financial statements of NAS for NPOs. While you prepare this statement, you just need to understand 2 important points. First, it has to be cross-referenced to the main body to the items it is related to. And second, it has to mandatorily contain certain disclosures required by the NAS for NPOs, like introduction of NPOs, accounting policies, and others that you can see on your screen. So this concludes the main documents required to be prepared as financial statements by an NPO. Besides the 5 main documents that we just discussed, NAS for NPOs also allows preparation of fund accountability statement and statement of budget variance as per requirement of the agreement. These two documents are project level reporting of NPOs and thus will be guided by the agreement of NPO with the donor. Fund Accountability Statement or FAS is a summary of total funds received by an NPO and expenditure made during the year. The balance of this amount is either represented by cash or bank balance or receivables or payable balances. This statement is more relevant for donors as it shows the sources and application of funds. Please note that the funds you see here is not surplus or deficit but remaining part of project or other funds. Similarly, the budget variances show the differences in budget and actual expenses during the year. As you can see on your screen, the format prescribed by NAS for NPOs is detailed and seeks to present the reasons for variance as well. Now I must clarify, when it comes to these two statements, there are confusing lines in the NAS for NPOs. Since these are project level reporting and also based on international practice, our interpretation is that these documents are required to be prepared only if mandated by the agreement with the donors. I'm certain Accounting Standards Board and ICANN will come up with clarification in this matter as well. Now that you know about the set of financial statements, you might be wondering how should we adopt NAS for NPOs. For this, paragraph 56 provides transitional provisions. Now the transitional provision demands a full video for itself, so I'll only just touch upon the main concept. The transitional provisions requires adopters to apply NAS for NPOs retrospectively unless impracticable. That means the financial statement have to be restated from earliest prior period as far as practicable, and comparative information also has to be restated. This brings us nearly to the end of this video. Utmost care has been given while preparation of content, but the interpretation may differ and we suggest that you consult your expert prior to depending on the information and taking action based on these informations. If you have any suggestion, comments or questions, you can drop it in the comment below or send us email in the addresses that you see on your screen and we'll respond to it. And at last, I hope you will acquaint with all the topics that you see on the screen. If you like the content and think it may help your colleagues and friends, then please do not hesitate to share. Thank you for watching.